Welcome back. There's just over a month to go until the end of 2017, and we all hope the cattle markets will end the year on a high note. And joining us now to talk about this is Troy Applehans. He's with CattleFax. Troy, we're about a month away from the end of the year. We've had some good news this fall. What's your read on these markets?
You know, this market this year isn't significantly different than it was in 2016 when you look at it on an annual average. You know, fed prices are likely going to end the year in the low 120s for an average. Feeder cattle prices kind of in the mid 140s, and calf prices in the mid 160s area. Seen a lot of calves that have sold in that 160s to 180s area kind of since summertime, really, and the calf market really just hasn't declined significantly into the fall time period like it normally does. So ended it on a pretty high note, particularly when considering that U.S. average 550-pound calf prices in 2016 during the month of October averaged 127.
Wow, yeah, a vast improvement. So what are the fundamentals that are driving this in the cow-calf sector?
Well, the first thing, Kevin, is that all segments of production are profitable today. You know, you start at the top and you go from the retailer who's been profitable. Obviously, the packer's been highly profitable this year, but feed yards have made money, stocker operators have made money, and consequently, cow-calf producers have made a pretty significant stride from where they were a year ago.
You bet. So let's talk demand for a minute. What are you guys seeing from a consumer perspective, both here and abroad?
Demand's been unbelievable. You know, when we've produced over 1 billion pounds more beef this year in 2017, we've harvested over 1 million more fed cattle this year. Demand's been unbelievable, and you know, all fresh retail beef prices are only a penny lower basically on average, yet we're selling 4% more volume here domestically, so that's a good indicator that demand's doing pretty well.
That's outstanding news. And the other relatively good news, I presume, are these feed prices. Tell us about harvest and your overall look at the feed side of the equation.
You know, there was a lot of concern with regards to how the corn market or how corn crop was going to perform this year, you know, all the way from last spring during planting season all the way to the end of the year through harvest. Looks like we're going to have over a 14.5 billion bushel corn crop, a record yield of 175 plus for the year. It's kept feed prices in check. Really, it's, you know, there's certain areas of the country, obviously, Kevin, you know, in the Montana and the Dakotas areas where it was so dry, where you'll have some elevated feed prices. But overall, look for feed prices to be, you know, pretty much in check until spring.
I know you'll give us a full rundown during convention at the Outlook seminar, but what's 2018 looking like from your perspective right now?
You know, we still feel like that we're in a cattle cycle, you know, where we have those 10 to 12 year periods between a high price to a low price, or a high to a high and a low to a low. We're fully expecting, you know, prices to be lower next year in 2018. We're going to produce 1 billion more pounds of beef in 2018 and another 1 billion pounds roughly in 2019. So the cattle cycle, went from a historical perspective, is kind of on track. We are expecting lower lows and lower high prices, Kevin, but you know, these markets have been volatile. You know, they go higher than we expect them to sometimes, and consequently they move lower than they should at sometimes too.
So take us to the practical side of this thing. What should producers be doing or thinking about right now to set them up for a successful 2018?
Well, as a cow-calf producer particularly, you've got to look for spots to manage risk in here because the markets are too volatile to just be a market taker. We, you know, members of CattleFax, we try to encourage them to be a market maker. In other words, we want to see them manage risk in some form. Obviously, you've got to do the basic things better and more efficiently as well. You know, wean more calves per cows exposed. Optimize your resources in terms of having weaning weights that are increasing and adding value, because cattle that have added value sell for more money.
Sure. And
so when we look at it from, do what you can identify to get paid for. If you can wean calves and get paid for it with a certified vaccination program, obviously that's something to do. Cattle that have some performance history, obviously they're going to garner more dollars as well.
Yeah, good advice. Thank you so much for coming on the show.
Appreciate you having me.
And if you're interested in where the cattle markets will go in 2018, then you should plan to attend the CattleFax Outlook seminar at the Phoenix Convention. It'll take place on Thursday, February 1st. Get all the details and register for the convention at the website ncba.org.